Hey guys, Khalil El Ghul here with Glass House Real Estate. It's June 23rd, 2022. I just came back from a listing appointment and I wanted to carry the conversation I had with that seller to all you guys today, because I really think it relates to the market. This could be a market update, this could be advice on pricing, but overall, it's the conversation I am having every single week, multiple times, especially over these last 3 or 4 weeks. And it has to do with price. We are talking about overpricing your home. What does that look like today? Historically, as agents, the standard practice of both agents and even appraisers when they appraise homes is that we look at the homes that have most recently sold with the homes that have sold within the last 6 months, getting the most emphasis and the most weight when determining the value of your home today. Now, of course, there are outliers, there are unique properties, there's something where there's just no comps. Assume that's not you, because those are few and far between. The conversation I just had today, I'm gonna make up the price. It was like, yes, I know your neighbor sold for $1 million. I know your house is a little bit nicer. I know your house is a little bit bigger, but they went under contract in March. They went $150,000 over asking price. They started at $850,000. And yes, I am telling you, if I were to list your home today, my suggestion is a number between $900,000 and $950,000. And the seller's like, what? That's $100,000 or $50,000 less than what the neighbor just sold for. And I was like, yes, I understand, it just settled, but it went under contract in March. And it's hard to have that conversation with the seller. They feel like they just missed out on $100,000, or they feel like their home value came down $100,000. And it's just not the case. I understand that the practicality of the whole situation doesn't seem fair, and it's a tough pill to swallow, especially if you bought into that market and now you're turning around and selling your home, which I have a lot of those happening right now. For the most part, no horror stories, but it's not a great place to be. So how do we price a home today? There's no two situations that are alike, and there are instances where pricing aggressively or overpricing makes sense, and I will make another video on that topic at another time. And there are instances where pricing significantly under the most recent comps makes sense. And what we're doing is we're looking at comparable sales over the last 1 to 2 years. We're looking at a much more broader scale of a home. So instead of maybe only a half-mile radius or a quarter-mile radius, we'll look 5 miles out, right? If someone's going into the marketplace with $1 million to buy a single-family house, what's our competition? What else are they looking at? What's available? What's under contract? What has been sitting? What came off the market? And we're taking all that data now into consideration when determining the price of your home. What's happening is that buyers have become conditioned to think that any home that's been on the market over 2 weeks is stale, or there's something just sort of fundamentally wrong with either the house or it's overpriced. It's this mind shift that's taken place over the last 2 years where, everything is different now. The same way that we don't weigh the most recent comps as heavily as comps from maybe 6 months ago. That's completely a new thing. I've seen some downturns. I got into business in 2005. I was here in 2008. I was here in 2012. The 2018 interest rates were at 5% in 2018. People forget, there have been some down markets over the last 20 years that I've seen. And in those down markets, the fundamental rules still sort of were in place. But this one is different. It's just different. The whole world's different. COVID kind of flipped everything upside down. It just is what it is. And what we're seeing now, if your neighbor sold for $1 million and just settled a month ago, you may very well be starting 10% lower, because that's where it should have sold. If your home's on the market for 2 or 3 weeks, buyer's perspective is that there's something wrong with your house, or maybe it's overpriced. It's not always, but that's just where buyers' heads are at. What's gonna happen next? I don't know. Don't ask a real estate agent for financial advice. It's good practice. About a month ago or 45 days ago, right when the market started to shift, right when the stock market started going to hell, right when gas prices started going up, we were still operating, business as usual, right? A lot of the homes that we put on the market, those were in the pipeline for maybe 30 or 60 days out in terms of getting the home ready, moving people out, whatever it was. And the price was also set 60 days earlier, 30 days earlier. So you really can't come back to a seller and say, hey, Mr. Seller, we don't really know. We can't just say, hey, you need to drop your price $100,000 because I have a bad feeling, or because there's a lot of bad news reports out, or they're raising interest rates. The market just wasn't there yet. So what was happening was myself and a lot of other agents We put homes on the market at these elevated prices based on what just recently sold. Unfortunately, a lot of those listings sat on the market. Really only one of two things happened. Either we got super lucky and we got one buyer, full price offer, decent terms, we accepted it, moved on, and closed. Or we almost got that offer, we had some showings, but nothing materialized, and then we sat on the market. And then 2 weeks, 3 weeks, 4 weeks, 5 weeks went by, and then the reality of the situation started to sink in, and we had to make some price reductions. And some of those price reductions were successful and some were not. In the end, ultimately, I'm still confident we sold for significantly more than they would have sold for maybe 6, 7 months ago, but definitely less than they would have sold for 2 months ago or 1 month earlier. We learned a lot during that time. And what I learned was, you know what, this is just a new market. Buyers just don't have the appetite to set record prices, to escalate hundreds of thousands of dollars over asking price, or just none of that's happening anymore. It's becoming more of a normal market. You know, buyers are getting some wins, sellers are getting some wins, but it's even. And if there are multiple offers, we're seeing 2 or 3. We're not seeing 10 or 11. 2 or 3 good offers, well qualified, but buyers are typically more cautious with their approach to the types of offers they're making. And more importantly, buyers are starting to feel like the advantage is shifting in their favor. They're starting to see more homes come on the market. They're starting to see more prices drop. Maybe those homes that are just above their price range will start dropping into their price range. So there's just not as much urgency. And when you take away the multiple offers, when you take away the urgency, and when you take away the lack of competition, it's inevitable that the prices will suffer. So when folks are worried about whether prices will come down or not, I don't know. But all I know is that you would have sold for more money a couple months ago than you would have sold now, but you're getting more money now than you would have, let's say, 6 months ago or 7 or 8 months ago. So all in, big picture, you're fine. You're gonna do okay. You will have a home inspection, you'll make repairs, you'll keep things together. What we're starting to see now as well is a lot of seller subsidies where the seller is giving the buyers a credit. Historically, credits are generally reserved for either closing costs for buyers who maybe are short on cash, but now we're seeing big seller subsidies that are being allocated strictly toward buying the interest rate down for their buyers. So for example, the interest rate today is 6%. But if you pay 1.375 points, you can get that interest rate down to 4.5%, which is significant. I'm seeing that on $500,000 homes, and I'm seeing that on $1 million homes. And the good news is you have comps that the home will appraise. In the past, the home would just need to appraise for that much more, which wasn't a guarantee. So you risk paying a big subsidy and then having to reduce the price later if the home doesn't appraise. That second risk is not as prevalent now because we have so many good comps that were set in this past spring. That's the conversation I'm having with clients now. Where do we need to price your home? And we can't hang our hat on just the homes that just recently settled. We really have to take a wider lens view on the market and on values and come up with the price there. If you price the home well up front, you'll get activity, you'll get it sold. If you price the home ambitiously, or if you aim to be the highest selling home in your neighborhood because you're better than the last guy, that may be difficult. I'm not saying overpricing is a bad strategy in all cases. There are valid reasons to price that aggressively. There are reasons to be the most expensive house. There are reasons to be overpriced. Quotation marks. Those are, again, far and few between. If you found this video helpful, please consider subscribing, hit the like button, and if you have any questions, all my contact information is below. Feel free to reach out and have a wonderful day.